Good morning. My name is Panayiotou. I'm partner with PwC Greece. I'm very happy to be here. I would like to thank the Delphi Economic Forum and Hellenic Bank Association for the invitation to moderate this panel. We are going to discuss about the contribution of the banking sector in the ESG transition of businesses. Here with me today, I have my colleagues that span from the banking sector, supranationals, Greek banks, but from government as well. So I would like to make a short introduction. We have together with us Vicky Loizou. Vicky is Secretary General for Private Investments at the Ministry of Development. We have Apostolos Siskos. Apostolos is a BOD member in the EBEA and also a chairman of the BOD at Envirometrics. We have Hennerkes from EBRD. She's a director at the Climate Strategy and Delivery in the Green Financial Systems. We have Ernestos Panayiotou. Ernestos is the Chief Transformation Officer at National Bank of Greece and also leads strategy in the international activities. We have Antonis. Antonis is a Senior Director in Piraeus Bank in Corporate Development and ESG. Dimitris Kazazoglou leads the ESG in Alpha Bank. And Pakis Papademetriou, who leads the ESG in Eurobank and also is a chairman at the Hellenic Bank Association. We are the first, so we have all the time we want. No, I'm joking. So we have to keep time, otherwise the whole day will go wrong in terms of time. So regarding the first question, I would like to ask Vicky. We know that RRF has created a significant momentum. We have seen major investments in digital, in transition. But now, what do you think? What are the key challenges that, moving forward, what are the key challenges that we have ahead of us?
First of all, I would like to thank for the invitation and be part of this exceptional panel. Talking about sustainable development is really important because it is a priority for the government of Kyriakos Mitsotakis since the beginning. And all three pillars of sustainable development are our priority: environmental, social, apart from the economic one. But also we would like to add the ethical one when we talk about transparency, governance, and all of these issues. But the situation after the pandemic highlighted even more the significance of investments in this kind of sustainable development, especially health issues, but also social inclusion. And of course, it is the RRF and the European funds that made compulsory investments on green transition. But our goal is to go beyond the compulsory and achieve, to change the mentality of investments. Let's say, make the environmental mentality and the sustainability not a transition period, but the main one, the mainstream. This is our goal. We know that it is really difficult, but all the funds with RRF and the other structural funds help us create this change in mentality. And this is a challenge to create the conditions so that after the RRF, we continue to this same direction.
Okay, thank you very much. Now, Apostolos, we see in the market that the ESG transition has created numerous data points across several, let's say, reporting requirements, and we don't have the same maturity level across the board, across the firm. So in terms of ESG reporting, and especially for the small businesses, what are the key challenges that you see in the market and how we can ensure a less burdensome reporting process going forward?
Thank you also for inviting me in this very interesting panel with very good composition. It's clearly that the past years ESG has taken a center stage in the corporate world and is impacting SMEs today. There has been growing awareness, of course, from various stakeholders, and unfortunately we have a growing frustration with the myriad voluntary sustainability schemes and standards that SMEs have to face. As you can imagine, this is a nightmare for the sustainability managers who find themselves sort of juggling multiple initiatives and constantly trying to collect information from different departments. Furthermore, I think that it's very important that until now there was lack of standard reporting templates and verification of sustainability reports and claims, which of course raises concern on the reliability of the initiatives and narrows down the scope mainly to marketing activities. Of course, the EU saw that gap and introduced CSRD, which sets, let's say, a unified disclosure framework that is no more voluntary, and of course brings in the issue of verification of these claims and reports. In addition, we have other initiatives from the European community that are trying to tackle issues like greenwashing. I would like to put now the consulting hat and elaborate where we are today, more or less, working with various industries and especially with hard-to-abate emission. I have been engaged with many sustainability managers and executives and sustainability leaders that are criticizing ESG. They are receiving numerous questionnaires with conflicting and uncoordinated requests, and they are struggling to find the purpose for that. I have also to add something very important that I'm sure that we all understand, that at this period we have also lack of personnel and skilled personnel in order to achieve the targets that we want to do in every stage of this process. So I think that another important issue is that until now we had more marketing focus of these ESG activities. Now with the new framework that is in place and is developed by EU, these claims and these, let's say, intentionally or not intentionally use of claims that are going to, let's say, more create an uneven level of playing field are going to be clear.
Thank you very much, Maya. We hear a lot about net zero plans. We hear a lot about net zero banking alliance, and we know that many banks across Europe and also Greek banks as well want to participate in these initiatives. Could you please help us understand how a net zero action plan could be practical, could be executed, and at the same time could be meaningful enough to be differentiated between banks that have different business models? So from the EBRD, you have seen different models. We have a diversified SME lenders versus banks that finance Sagris and so on and so forth. So,
yeah, thanks very much. I think the transition plan is really an interesting new tool that we see emerging. We've seen over the past maybe 3 to 5 years, there was this plethora of banks proclaiming net zero pledges by 2050. There was very little clarity how to get there. And while the ultimate goal, of course, is commendable, we need to find now a very concrete and robust and credible way how to actually achieve this goal. So what we see we're discussing this in different national and international fora, for example, the NGFS, the Network for the Greening of the Financial System, also at the EU Sustainable Finance Platform, where we're part of. The transition plan seems to be emerging as like a central tool to actually become very much concrete. And I personally really, really like it, because I think the transition plan allows to, for every bank, to start wherever they are, because the starting points obviously vary. Banks are differently advanced in the ESG agenda, so they can find their own starting point. It takes into account and is adaptable to, of course, the national legislation, but also specifics of the location where they operate. Let's say in a country that's highly vulnerable to climate change, you maybe want to include more climate adaptation into your transition plan and not only mitigation, as an example. It also allows really for taking into account what you alluded to, different lending strategies, different business models. If you're a bank, let's say, that's highly exposed or lending very strongly to the agriculture sector, agribusiness sector, then of course you have different climate stresses that you want to manage over time. So I think this is sort of the beauty of the transition plan, that you can do this all in a very sort of individualized manner. However, what we've also seen for the transition plans to be credible, to be robust, there are certain characteristics, I think, that are emerging that they all have or definitely should have. And maybe just to very briefly mention 4 of them, in my view. First, of course, there needs to be an emission reduction plan, and that needs to cover both the operational emissions that we, as a bank, our buildings, our travel, our cars, etc., create or produce, but also, and this is very difficult to do, but it's very important to do, we need to start really measuring and then also managing our financed emissions, because as banks, we're of course supporting emissions that are produced by the SME sector, by the companies that we lend to. So first, if we want to manage those and if we want to know what we're actually financing, we need to start measuring that, and then we can set some targets that are meaningful. Second point, for sure, fossil fuel policies. I mean, as blunt as it may sound, there's no space anymore for coal financing in a green trajectory. It's just not anymore part of it. And any other exposures to fossil fuels, there can be, but we need to look at what is the low carbon pathway. How does, for example, an exposure to gas or some other fossil fuels, how does that fit in, and how do I manage it? How do I reduce it over time? The third point, of course, and I think this is important, Vicky, you mentioned it, this is not just about compliance. This is also supposed to really shape ambition. And I think having targets in your transition plan about climate finance, where you want to direct your funding to as a bank, is very important, and it can really help us to focus our energies. And then the fourth bit, which is sort of the backbone of it all, is robust ESG governance. So we need to make sure that our boards are thinking about sustainability issues, that they're supervising them, that they're looking at environmental performance data. We need to see, what's the function of the legal department, of the audit department, of the strategy department, of the business department. Everybody has a role to play. And I think the ESG governance that we need to set for ourselves, that often needs improving, so that can also be part of a transition plan. So these are the 4 points I would say.
Okay, thank you very much. Ernesto, you have completed a huge transformation plan, a huge transformation journey, let's say, across the bank. And now you have also a new mission to create an ESG, let's say, transition plan. What do you see in the market? We understand that there are different levels between the market participants. So could you please comment on that?
Thank you, Panayiotou. First of all, the transformation seems to be going on and on, because exactly we have so many changes in the environment. And as you said, there was a previous phase of, I would say, more focused on digital transformation. We now have a phase which definitely shifts, among other topics, towards the ESG transformation. Now, in Greece, I would say, as in other markets, there is a different level of maturity, different level of awareness, different level of willingness of clients to invest in their green transition, depending on the segment and on the sector. So if we look at large corporates in Greece, I would say we're on a good path. On the high-emitting sectors, such as power generation, oil and gas, cement, aluminum, sectors for which we are setting net zero targets, we have large corporates that understand the risks, that set ambitious net zero targets and create transition plans, that invest in green energy, in new technologies, and their transition. And I would say that also in some of the strategic sectors for the Greek economy, like tourism, we see some front runners that invest in sustainability as a new competitive advantage. So on a good path, obviously a long way to go. In SMEs, I would agree with Apostolos, there's a lot more challenges. Certainly the RRF has improved awareness for SMEs, but the picture is mixed. In NBG tracking surveys that we run, it seems that out of the SMEs that pursue RRF funding, currently about 20% are focused on the green transition. So they prioritize first growing in size, second, digitizing operations, and third, greening their model. The numbers are higher if you look at industrial SMEs. So there, about 70% say that they are interested in investing in their green transition. And there's an interesting new finding that also SMEs in areas affected by climate change and natural disasters in the last year are more prone towards investing in green transition because they've also seen the risks materialize. However, I would agree that the majority of SMEs find it challenging and need to tackle a lot of other priorities. So they lag versus EU in terms of where we stand on the transition. On households, things are, I would say, closer to what we see for small businesses. So we've asked consumers, are you concerned about climate change? And 85% said, yes, I am very concerned about climate change. But then when you ask them, okay, do you want to invest in upgrading the energy efficiency of your home or in e-mobility, then answers start getting a little bit more fuzzy because there's cost involved. So there, I think, if there's no legal push or if there's no clear incentive, we will lag in terms of the green transition. So banks, I think, apart from our financing role, we also have a bit of an advisory or educational role to play here in order to support the green transition of the country.
Okay. Thank you very much, Ernesto. Now, Antonis, I have a question for you, which is a mix between what Ernestos was describing and Maya as well. So we understand that not all the sectors have the same, let's say, footprint in terms of ESG. So we have the high emitters, we have the low emitters, and different, let's say, maturity level, and of course, different impact. We have first-order effects and second-order effects, because if you finance a transportation company and if you finance an oil and gas company and so on and so forth, you'll have different impact and different penalties from the regulator, but at the same time, you need to have credit. So from your point of view, what would be, let's say, the optimal approach of a bank towards different sectors? And do we have one size fits all? Do we need to differentiate a little bit? What would be, let's say, the optimal?
Thank you, Panayiotou. It's a pleasure being here, especially with all these participants. It's a little bit in the morning, but I think we'll figure this out. Setting the stage, Greece has to abate close to 80 megatons of CO2. Everybody knows that number more or less. Every sector is going to be influenced. It's going to have an impact. In Greece, we believe that the energy sector, the power sector is going to have a leading role, a pivotal role. It's going to be playing a lot more, it's going to be influencing the way electrification is going to be going forward. It's going to be contributing RESs a lot more in the energy mix. This, of course, is going to have a spillover effect with other sectors as well. Every sector is going to have their own pace, that's for sure. Not everyone is going to be ready, let's say, to 2030 or even 2050. We believe the energy sector is going to be fully decarbonized and net zero. Some other sectors that do have great contribution, let's say, in CO2, and they have some transition plans, we would kind of separate the building sector, the waste management sector, the industry sector, of course. These sectors are going to be, filling in the pace as we go along. The transportation sector might be lagging a little bit in the sense setting down the technologies, seeing what's out there, and making the right investments. But I think it's essential to be able to address the structural challenges that every sector has. And, you know, kind of assess the timing between the investment and the returns in order to facilitate these investments to take place. We mentioned a lot of sectors. We mentioned the SMEs. We're very keen to the agriculture sector as well, which is, we participated yesterday in very interesting panels, and we discussed the problems with the agriculture sector as well. It's very fragmented. You cannot initiate a very decarbonized rollout that would have a real impact in the sector. It's going to take a lot longer. It's going to take a longer time. It's also mentality. We listened to that yesterday as well. It takes training. It takes a sort of a refocus to new technologies, new data, taking advantage of that business intelligence that, say, every sector could have. And, you know, coming to the end, I think transition finance is critical to net zero. It's driving capital to the investments and helping these decarbonizations abatements. However, there are challenges that, you know, are prone to acquire such capital and make them, you know, available to these sort of technologies. There are aspects like greenwashing. There are aspects of transparency and things like that. These are kind of new aspects in our industry as well. Enabling the transition, Maya, you know, raised the flag on transition planning. It's very important, especially transition planning to hard-to-abate sectors. It requires us to work closely with customers. It requires us to understand these transition plans. Maybe the expertise are not in place yet, but it's going to require some time. Understanding this, the way that they're going to go along. So this is going to enable a sort of a synergy between banks, between customers and investors in order to, you know, fulfill these plans, and it is important.
Okay. Now, Dimitri, we have been discussing a lot about challenges, about the things we have to do, but how can a business, how can a company utilize ESG as a source of a competitive advantage? Or in other words, do we need a sustainable strategy or rather a sustainable business instead of?
Thank you, Pano. So yeah, indeed, I think as has been established, the focus until now over the last few years from both banks and also from our customers has been on how to comply with the slew of new regulations such as disclosure, transparency, CSRD, and so forth. And indeed, those are great technical challenges, but I think we're getting to the point at which, first of all, we're seeing that the technical challenges will be surmounted, but at the same time, we're also getting to the point where, with sustainability no longer being a new thing in our life, it's been a key part of our lives for several years now. We need to start thinking about it as something that is integral to how we design business strategy. And there isn't a business model out there that isn't going to be affected to some extent. So whether you're in a B2B business model, your sustainability performance is going to determine whether you're able to participate in a large value chain in the supply chain of a large manufacturer, for example. If you're in a B2C segment, your consumers are increasingly going to be more sensitive towards sustainability. And of course, as Ernestos rightly said, this is at an early stage in Greece, but we have seen other foreign markets where consumers are extremely sensitive about sustainability, and ceteris paribus, they usually will factor it into a selection decision. So it's no longer something that a business has to do in order to comply. It's really something that a business just has to do in order to do business. And I'll characterize it with an interesting comment that I had from an institutional investor that I was discussing with, where we, that is to say the bank, had presented all the work that we had done in setting up various types of climate risk management frameworks and improving our compliance with regulations and improving our disclosures. And she said, this is wonderful, but this is also now becoming a hygiene factor. So let's talk about how we make money out of this. So I think that's the focus that we need to shift to. And even though the challenge of compliance is still there, we need to start thinking about the next phase.
Thank you very much, Dimitris. Paki.
Fun.
You chair the ESG steering committee at Hellenic Bank Association. So how have you contributed in creating, let's say, a more consistent, a more transparent, and a more standardized way towards reporting?
Okay. First of all, I would like to say that I'm very happy that we're here. And we need to thank the Delphi Forum for helping the Hellenic Bank Association put together this panel. Well, the 4 systemic banks represented here, we're all part of the ESG coordinating committee of the Bank Association. And in order to address sustainability and the fight for climate change, you need systematic multilateral cooperation at national, at sectoral level. Sustainability is a team sport, and we are proof of that. We're working together to address one of the most critical aspects of moving the transition forward, and this is data. Maya mentioned that, and it is necessary that we build reliable, accurate, substantiated and verified data regarding ESG performance. So it is really the Achilles heel of ESG development, and we address this by putting together an interbank initiative for collecting data from our clients, ESG performance data. It should not be taken for granted that this is easy to put together, because it's only less than a handful of countries in Europe that have achieved this. We put together a platform, we call it ESGR, and we worked with Tiresias together on that. And the idea there is to have a centralized data collection and repository regarding ESG data. This has a great effect in the market because it starts by creating market-wide consensus on the necessity of accurate data and the benefit of that data for the companies, for our clients, for their extroversy, for their mitigation of risk, and their overall performance. But most of all, and as we have discussed on a number of occasions with the Ministry of Development and the EBEA Chamber, we need to address the lack of awareness, particularly with smaller companies, with SMEs. It is not easy to understand how difficult it is to convince companies that what the banks require from them in terms of data, it is for their own benefit. So we try to work on that. The platform is out since last December. We're working out in 3 waves so far. If I can put together some of the advantages of this initiative is, first of all, it standardizes and reduces the volume required by the banks from their customers in terms of ESG data. And ESG data, we're talking about climate data, but we're also talking all aspects of ESG, all aspects of sustainability. So there is a central coordinated data repository that makes sure that the clients do not have to fill in different questionnaires on similar issues from different banks. It serves an automatic solution that helps the company enter data and substantiate data, and it helps the alignment with the requirements of CSRD. Banks have a critical role to play in serving the long-term targets of the EU Green Deal, and organizing ESG data as part of financing. It is a crucial exercise to serve these goals. And like I said, it is a team sport, and it is only together the banks and the other factors of the market that working together we can help the Greek business community for making this transition.
Paki, thank you very much. Now going to a second cycle of questions. Vicky, going back to you, we have been discussing about ability, about willingness in the market. So what are the key, let's say, tools and measures that you have in mind, either current or going forward, in order to help and facilitate the ESG upskilling and the ESG transition of the whole economy?
Let's say that the government has two kinds of tools, either the legislation and the legal framework or some standards we can put so as to make obligatory the compliance with sustainable criteria, or create incentives and use the educational, let's say, aspect. Ernestos and Pakis also mentioned the significance of awareness. We, at the Ministry of Development, for example, we are preparing now a new ministerial decision for criteria of ESG, even in strategic investment, we want to create, even for SKC, which is a special planning tool, we want to input ESG criteria, so we are going to publish a new ministerial decision introducing this kind of criteria even in this kind of investments, but also we try to introduce ESG criteria to the new regimes of the development law. And in the beginning it may not be something really strict, but for big companies we can use this kind of criteria, not in a high level, but in an educational, let's say, aspect. We want to introduce this kind, and of course the leverage of funds through the banking systems also will help us towards this direction.
Thank you very much. Apostole, what are the key initiatives you are discussing in EBEA in this front?
It is obvious, but I will confirm that the Athens Chamber of Commerce and Industry, the largest chamber in Greece, supports every effort for sustainable development and, of course, transition to a zero-emission economy. In this context, and trying to set an example for our members, we have done the following. First, we calculated our CO2 emissions from 2021, 2022, and on scope 1, 2, and 3 emissions. Second, we verified these data by an independent accredited verification body, emphasizing on continuous commitment to transparency and reliability. And of course, we have developed a bold strategy to reduce emissions from our activities and aiming to achieve carbon neutrality by 2025, which is almost here. So just to add with something that Pakis mentioned before, Greece has made progress and already demonstrated impressive results in shifting to digitization of many of its activities. I think that the initiative that the Hellenic Bank Association related to ESG is in this direction. It will be, I think, very useful for SMEs because they don't have the resources, human resources and capital resources, of course. And this unified platform of collecting data will be very useful. And if we go one step further, I think that you should consider in the future interoperability with other platforms, and of course, including any other new regulation that will appear in the future.
Thank you very much, Apostolos. Maya, and now we have the Greek banks that have graduated from EBRD. You have all the lessons learned, and you have serious action plan and a very solid action plan going forward. What are the key tools from a funding angle that you have in mind?
Yeah, look, I always say half jokingly, half seriously that we can green anything. We have obviously green versions of pretty much every funding instrument that EBRD puts out there, green lending facilities, green mortgages we support, green capital market issuance, and so on and so forth. Maybe one trend that I observe, and which I think is important and also relates to what many of us have been saying at this panel, is there's really a trend, I think, now from moving a little bit away from this strict focus on the use of proceeds to more the counterparty. Greening us as banks, we're greening ourselves through the transition plans, through the net zero engagements, through our climate governance, etc. Also our clients, we're looking much more at performance-based instruments such as sustainability-linked bonds, sustainability-linked loans, and I think this shift is very significant, and it also, a little bit what you said, Ernesto, we have a bit of an advisory function as well. Definitely for us as EBRD, as a multilateral development bank, maybe even more so. So what we do together with our funding now is we really support banks very strongly on transition planning. We've created cohorts in collaboration with central banks, for example, in Armenia, Turkey, Tajikistan, other countries on the way, that we're really providing them with the capacity to see, okay, how can I green everything? How can I do all the different components that we've discussed? And I think this is super significant. And I also really would like to applaud the efforts of the Greek banks, and Pakis, you've described some of them, to really step it up. And I would like to encourage and challenge you to not become complacent, because as you said, it is a team sport, and it's also very, very urgent. So we need to really get on it. Stay on it.
Thank you very much, Maya. Now, cautious of time, I would like to keep it a little bit short. So, Ernesto, I think it was the closing remark in the first question. So, the banks can have an active advisory role.
Yeah.
So,
yeah. I mean, I'll build on what Maya and Apostolos said. I think through the net zero target setting exercise, through transition planning, we're gaining new insights and new know-how in specific sectors, especially the energy sector, I would highlight, because as banks, we now have a very good understanding of the technologies, the decarbonization levers, what it will take to get to net zero. So the idea there, and I think what we need to do, is stand next to our clients and stand next to them as partners, as advisors throughout this journey. For SMEs, I very much believe in the power of data. I think the ESGR platform that Pakis described is a great new tool to have more comprehensive and better quality data. And as we get more mature and build on this, we can hopefully also provide some insights to SMEs, so they know how they perform versus their peers, and they understand also what are the levers and the actions they need to make to become better. For households, I would say, and for small businesses, probably we need to move along the path of creating more end-to-end solutions that allow them to get a better understanding on the benefits versus the costs of investing in their green transition. As we all said, I think it's a partnership game. It's something that everybody should be working on. So I think along that way, we continue to work also as a Hellenic Bank Association.
Okay, thank you very much, Ernesto. Antonis, Maya said we can green everything, but at the same time, we need to be prudent, and we need to have, let's say, a reporting on prudential grounds. Either we're discussing about CSRD or EU taxonomy or green asset ratio. So how can a bank do that?
You know, the things are messy when you've used all the letters in the alphabet for these acronyms. So even we used, I think, G. G wasn't used before in our platforms. There's tons of reporting standardization and disclosures and standards. takes a lot of time in order to understand these because there are multi-pages of regulations. It's very hard. It requires a lot of expertise. But even if we do understand them, it has some room of interpretation. So, you know, you won't see the 100%, let's say, standardization of these guidelines. Besides that effect, you know, it kind of helps us in order to understand a little bit the metrics that the market is looking, the investors are looking. So it kind of guides also a lot of business to see where to put the focus to. Sustainability is very top on the agenda. You know, it's an ESG mania as we speak. So, and there are a couple of drivers that, you know, contribute to that. There's an increasing heightened regulatory pressure, for one thing. There's in our tables with the shareholders' engagements and investors, there's a lot more topics regarding these issues that we're discussing than we did a long time before. And also the industry comes with our competition as well. The people that are understand a little bit better and are committed to accurate data, having the targets, having industry, let's say, decarbonization targets as we speak, transition plans as well. It seems that these companies have a kind of a competitive advantage. They built a good relationship with the market, so it kind of gives them the edge, so that's important. And finally, risk management. You know, we're prone to risks. We've been talking, you know, about these climate crises. It's a very serious word. It's here. We've been experiencing these events. So, you know, you need these type of data in order to make valuable estimates and kind of foresee what's planning in the future. So it's quite important, yes.
Thank you very much. Dimitri, what about access to funding and what about investors?
Yeah. So the data that Panayiotou was just talking about is indeed an indication of the viability of the business. So to any outside stakeholder, it tells you how viable is this business. And the key to that is that it can be a tool for securing access to capital and funding at all phases of the capital life cycle of a business. So this doesn't just mean bank lending, it also means instruments, bonds, debt, equity. And as banks, as part of the role of the banking system, is to actually leverage the data that we're building in the HPA platform, which is an excellent initiative, and then support our clients throughout this cycle to gain access to this funding, both with our own lending activity, but also by facilitating their access to other sources of funding. Because although we're developing, like everybody else, the expertise in sustainability, we already have the expertise in finance that we can leverage in order to help them through this transition.
Okay. And Paki, the last one. What about the operational side of things? What about the sustainable procurement, the ESG procurement you see?
Well, banks, they're helping the market transition to sustainability. But there are also large organizations that they need to make this transposition themselves. So we need to think in terms of value chain. So the banks, they have, in the way they operate, they have a large impact. The banks have a very large building portfolio. And buildings contribute about 40% of the global greenhouse gases. So by investing in green buildings, in low emission operation, it helps a change. For us, for Eurobank, moving from one building of the headquarters building to a new one, we had something like 47% of savings in emissions, in energy intensity level. But we need to think across the value chain. So there is the upstream part and there is the downstream part. The downstream part goes with the clients and building capacity with our clients. Continuous awareness, continuous training, if I may say so, of our clients on how to interact. And then upstream. Banks, they have a large supply chain. So by putting ESG criteria in their tender process, by pushing their suppliers to adopt sustainability principles that the banks themselves, they use for their operation. That helps change the entire market. So just like banks change the market, they change themselves, and this is all part of the transposition that we need to do.
Thank you very much. It was a pleasure being here. Now I will pass the floor to Mr. Pefanis for the next session. So thank you very much.
Thank
for
you.
everything.
Thank you.